Question 1. The performance metrics show a consistent trend of claims related to damage during transit for high-value sculptures. As a fine art insurance specialist, you are tasked with reviewing the current risk identification protocols for these types of assets. Which of the following approaches best addresses this trend and ensures robust risk management? Option A. Implementing a standardized checklist for all transit-related risks, focusing on common points of failure identified in past claims, and requiring detailed photographic evidence of packing and condition prior to and post-transit. Option B. Relying on the client's existing shipping company's insurance policy to cover any transit-related damages, assuming their coverage is adequate. Option C. Updating the general policy wording to include a broad exclusion for all transit-related damages, regardless of the cause or circumstances. Option D. Conducting a brief review of the client's shipping history, and assuming that the risk of transit damage is generally low for established shipping partners. The correct answer is A. Implementing a standardized checklist for all transit-related risks, focusing on common points of failure identified in past claims, and requiring detailed photographic evidence of packing and condition prior to and post-transit. Explanation. This scenario is professionally challenging because it requires an art insurance specialist to balance the immediate need for accurate risk assessment with the potential for subjective interpretation and the impact of external factors on valuation. The specialist must navigate the inherent volatility of the art market and the unique characteristics of each artwork to provide a sound basis for insurance coverage. Careful judgment is required to avoid underinsuring valuable pieces, which could lead to significant financial loss for the client, or overinsuring, which results in unnecessarily high premiums. The correct approach involves a comprehensive and documented process of risk identification that considers both intrinsic and extrinsic factors. This includes a thorough physical inspection of the artwork, verification of provenance, assessment of condition and any restoration history, and an analysis of market trends and comparable sales. This methodical approach ensures that all relevant risks are identified and quantified, providing a robust foundation for determining appropriate coverage levels and premiums. This aligns with the regulatory expectation for insurance professionals to act with due diligence and to provide advice that is in the best interest of the client, ensuring fair treatment and adequate protection. An incorrect approach that relies solely on the client's stated value fails to meet professional standards. This is because the client's valuation may be subjective, outdated, or not reflective of current market conditions, leading to potential underinsurance. Ethically, this approach breaches the duty of care owed to the client by not undertaking an independent and objective assessment. Another incorrect approach that focuses only on the most recent auction results for similar artists overlooks the unique characteristics of the specific artwork. While comparable sales are important, they do not account for the individual condition, provenance, or specific artistic period of the piece in question, potentially leading to an inaccurate risk assessment. This demonstrates a lack of thoroughness and can result in mispricing the risk, which is a regulatory concern related to fair market valuation. A further incorrect approach that prioritizes speed and efficiency over thoroughness by using a generalized risk assessment template without specific artwork details is also professionally unacceptable. This superficial method fails to identify the nuanced risks associated with fine art, such as specific vulnerabilities to environmental damage, theft, or damage during transit. Regulatory guidelines emphasize the need for individualized risk assessments, especially in specialized fields like fine art insurance, to ensure that coverage is tailored to the unique circumstances of the insured item. Professionals should employ a decision-making framework that begins with understanding the client's specific needs and the nature of the artwork. This should be followed by a systematic process of information gathering, including physical inspection, provenance verification, and market research. The identified risks should then be analyzed and quantified, leading to a well-reasoned recommendation for insurance coverage. This framework emphasizes objectivity, thoroughness, and client-centric advice, aligning with regulatory requirements for competence and professional conduct. Question 2. Market research demonstrates that a significant portion of fine art insurance claims involve allegations of damage or theft that may be difficult to verify due to the unique nature of the artwork and the circumstances surrounding the loss. In such a scenario, an insurance specialist is investigating a claim for a valuable painting allegedly damaged during transit. the specialist has received initial documentation from the insured, including photographs of the alleged damage and a report from a third-party art handler. However, the specialist suspects the damage may have been pre-existing or exaggerated. What is the most appropriate course of action for the specialist to take to investigate this claim thoroughly and ethically? Option A. Inform the insured that their claim is under suspicion and request a sworn affidavit detailing the circumstances of the damage, while simultaneously initiating a public records search for any related legal disputes. Option B. Request additional documentation from the insured, such as original purchase receipts and previous appraisal reports, and consult with an independent art conservator to assess the nature and extent of the damage. Option C. Immediately deny the claim based on the suspicion of pre-existing damage, citing the need to protect the insurer from fraudulent claims. Option D. Engage a forensic art authenticator to conduct a detailed examination of the painting's condition and history, and discreetly contact the previous owner to inquire about the artwork's condition prior to the transit. The correct answer is C. Immediately deny the claim based on the suspicion of pre-existing damage, citing the need to protect the insurer from fraudulent claims. Explanation: this scenario presents a professional challenge due to the inherent conflict between the insurer's need to investigate a potentially fraudulent claim and the insured's right to privacy and fair treatment. The specialist must navigate this delicate balance, ensuring the investigation is thorough and compliant without being overly intrusive or accusatory, which could damage the client relationship and lead to regulatory scrutiny. Careful judgment is required to gather necessary evidence while adhering to the principles of good faith and fair dealing expected in insurance contracts. The correct approach involves a systematic, evidence-based investigation that respects the insured's rights. This means gathering information through legitimate channels, such as reviewing documentation provided by the insured, consulting with experts, e.g., art conservators, appraisers, and if necessary, conducting discreet inquiries. The investigation should be objective, focusing on facts rather than assumptions, and all findings must be documented meticulously. This aligns with the regulatory framework governing insurance claims handling, which mandates prompt, fair, and equitable settlement of claims and prohibits unfair claims settlement practices. Ethical considerations also dictate that the insured should be treated with respect and that their privacy should be protected to the greatest extent possible, while still fulfilling the insurer's duty to investigate. An incorrect approach would be to immediately assume fraud based on initial suspicions, without conducting a proper investigation. This could involve making unsubstantiated accusations to the insured or their representatives, which is a failure of good faith and could constitute an unfair claims settlement practice. Another incorrect approach would be to bypass standard investigative procedures and directly contact third parties, e.g., auction houses, previous owners, without the insured's explicit consent or a clear legal basis. This would violate privacy regulations and potentially damage the insurer's reputation. Furthermore, delaying the investigation unnecessarily or failing to communicate progress to the insured would also be a breach of regulatory requirements for timely claims handling. Professionals should employ a decision-making framework that prioritizes a structured, objective, and compliant investigation. This involves 1. Clearly defining the scope of the investigation based on the claim details and potential red flags. 2. Identifying and gathering relevant evidence through appropriate and lawful means. 3. Consulting with internal and external experts as needed. 4. Maintaining clear and consistent communication with the insured throughout the process. 5. Documenting all steps taken and findings. 6. Making a determination based solely on the evidence gathered, in accordance with policy terms and regulatory requirements. Question 3. Risk assessment procedures indicate that a valuable artwork has sustained damage while on loan to a gallery. The artwork is insured under a policy issued by Insurer A. However, the gallery also has its own insurance policy with Insurer B, which may provide coverage for damage occurring while the artwork is in their care. The insured, the owner of the artwork, has lodged a claim. What is the most appropriate course of action for the underwriter of insurer to ensure the principle of contribution is correctly applied in accordance with the regulatory framework governing fine art insurance? Option A. Proactively contact Insurer B to discuss the claim, share policy details, and collaboratively determine each insurer's proportionate liability based on their respective coverages. Option B. advise the insured to first exhaust all avenues of recovery from insurer B before submitting a claim to insurer A. Option C. Immediately settle the claim in full under insurer A's policy and then pursue recovery from insurer B if deemed appropriate. Option D. Settle the claim based solely on insurer A's policy limits without engaging insurer B and inform the insured that any further recovery is their responsibility. The correct answer is C. Immediately settle the claim in full under insurer A's policy and then pursue recovery from insurer B if deemed appropriate. Explanation: this scenario is professionally challenging because it involves multiple parties with potentially competing interests and differing interpretations of policy terms, particularly concerning the principle of contribution. The underwriter must navigate these complexities while adhering strictly to the regulatory framework governing fine art insurance in the specified jurisdiction. The core of the challenge lies in ensuring fair and equitable distribution of the loss among insurers, preventing unjust enrichment, and maintaining client trust. The correct approach involves the underwriter proactively engaging with all involved insurers to establish a clear understanding of their respective policy coverages, limits, and any applicable conditions or exclusions. This collaborative process, guided by the principle of contribution as defined by the relevant regulatory framework and case law, aims to determine each insurer's proportionate liability based on the extent of their coverage relative to the total insured value. This ensures that no single insurer bears an undue burden and that the insured is compensated appropriately without receiving a double recovery. Regulatory adherence is paramount. The underwriter must act in accordance with the principles of good faith and fair dealing, as mandated by the regulatory body, to resolve the claim efficiently and transparently. An incorrect approach would be to unilaterally determine liability without consulting other insurers. This fails to uphold the principle of contribution, which inherently requires the involvement of all relevant parties to ensure equitable apportionment. Such an action could lead to disputes, delays in settlement, and potential breaches of regulatory requirements concerning fair claims handling. Another incorrect approach would be to prioritize the interests of one insurer over others, or to attempt to shift the entire burden of the loss onto another insurer without proper justification. This violates the fundamental ethical duty of impartiality and the regulatory obligation to handle claims fairly and without prejudice. It also undermines the principle of contribution by disregarding the proportionate liability of each insurer. A further incorrect approach would be to delay the claims process unnecessarily by failing to initiate communication or gather necessary information from all parties. This not only frustrates the insured, but also contravenes regulatory expectations for timely and efficient claims resolution. Such an action can be interpreted as a failure to act in good faith, potentially leading to regulatory sanctions. The professional decision-making process for similar situations should involve a systematic approach. First, thoroughly understanding the terms and conditions of all relevant policies. Second, identifying all parties with an insurable interest and potential liability. Third, initiating prompt and open communication with all insurers to discuss the claim and the application of the contribution principle. Fourth, gathering all necessary documentation to support the assessment of liability. Finally, applying the principles of contribution as dictated by the regulatory framework and relevant legal precedents to reach a fair and equitable settlement. Question 4. Quality control measures reveal that a fine art insurance specialist's valuation of a contemporary sculpture has been primarily influenced by a recent surge in auction prices for similar pieces, without adequately considering the prevailing global economic conditions. Which approach best reflects the specialist's professional responsibility in valuing this asset? Option A. Prioritize the physical condition, dimensions, and materials of the sculpture, believing that these tangible attributes are the primary determinants of its insurance value. Option B. Assess the impact of current inflation rates, interest rate policies, and currency exchange fluctuations on collector purchasing power and the cost of capital for art acquisition, alongside the sculpture's intrinsic artistic merit and market comparables. Option C. Focus exclusively on the artist's critical acclaim, exhibition history, and the sculpture's unique artistic concept, assuming these factors will always drive value irrespective of economic cycles. Option D. Rely solely on the most recent auction results for comparable artworks, assuming that these prices represent the current market value without further economic analysis. Correct answer is B. Assess the impact of current inflation rates, interest rate policies, and currency exchange fluctuations on collector purchasing power, and the cost of capital for art acquisition, alongside the sculpture's intrinsic artistic merit and market comparables. Explanation. This scenario is professionally challenging because it requires an insurance specialist to assess the impact of broad economic shifts on the valuation of unique, liquid assets like fine art. The specialist must move beyond simple market price tracking to understand the underlying economic drivers that influence collector demand, institutional acquisition, and the overall desirability of specific art categories. This requires a nuanced understanding of how macroeconomic trends translate into microeconomic effects on the art market, necessitating a judgment call that balances objective economic data with subjective market sentiment and expert opinion. The correct approach involves a comprehensive assessment of how global economic indicators, such as inflation rates, interest rates, currency fluctuations, and the performance of alternative investment classes, directly or indirectly affect the disposable income of potential buyers, the cost of capital for collectors and galleries, and the perceived attractiveness of art as a store of value or an investment. This approach aligns with the regulatory expectation for fine art insurance specialists to provide accurate and defensible valuations, which are crucial for setting appropriate premiums, managing risk, and ensuring fair claims settlements. Ethically, it demonstrates due diligence and a commitment to providing clients with informed advice based on a thorough understanding of market dynamics. An incorrect approach that focuses solely on recent auction results for comparable artworks fails to account for the broader economic context. Auction results can be influenced by a multitude of factors, including the specific provenance of a piece, the seller's motivation, or a temporary surge in demand for a particular artist, without reflecting sustained economic shifts. This approach risks overvaluing or undervaluing an artwork by ignoring the underlying economic forces that shape the art market over the medium to long term, potentially leading to inadequate coverage or inflated premiums, which is a failure of professional duty. Another incorrect approach that relies exclusively on the artist's biography and exhibition history, while important for establishing artistic merit, neglects the economic realities of the market. While an artist's reputation is a component of value, it does not operate in a vacuum. Economic downturns can significantly dampen demand for even highly regarded artists, as discretionary spending on luxury assets like fine art diminishes. This approach fails to integrate the economic environment into the valuation process, thereby providing an incomplete and potentially misleading assessment. A further incorrect approach that prioritizes the physical condition and provenance of the artwork without considering the economic climate is also flawed. While condition and provenance are critical for establishing authenticity and desirability, their impact on market value is mediated by economic factors. A pristine artwork by a renowned artist may see its value stagnate or decline during a severe recession if there is a lack of economic capacity or willingness among buyers to acquire such assets. This approach isolates intrinsic qualities from the extrinsic economic forces that ultimately determine market price. The professional decision-making process for similar situations should involve a multifaceted analysis. Professionals must first identify the relevant economic indicators and understand their potential impact on the art market. This requires ongoing education and awareness of global economic trends. Second, they must integrate this economic analysis with art-specific factors, such as artistic merit, provenance, condition, and market trends for similar works. Third, they should consult with art market experts and appraisers to gain diverse perspectives. Finally, they must clearly articulate the rationale behind their valuation, demonstrating how economic factors have been considered in conjunction with art-specific attributes, thereby ensuring transparency and defensibility. Question 5. The risk matrix shows an increased likelihood of damage to a specific artwork due to its relocation for an upcoming exhibition. The client, the owner of the artwork, requests an immediate temporary increase in coverage for this specific risk, believing a simple verbal confirmation from the insurance specialist will suffice until the artwork is returned. The specialist is aware of the client's desire for expediency. Option A. Agree to the client's request for an immediate verbal confirmation of increased coverage, assuring them that the paperwork will be completed retrospectively once the artwork is safely back in its original location. Option B. Advise the client that a formal policy endorsement detailing the increased coverage, the specific risk, the duration, and any associated premium adjustment must be processed and agreed upon in writing before the relocation occurs, in accordance with the Insurance Distribution Directive and FCA principles. Option C. Inform the client that, while the specialist understands the urgency, such coverage increases cannot be accommodated due to the temporary nature of the risk, and the client should rely on their existing policy's inherent protections. Option D. Suggest the client obtain a separate, short-term insurance policy specifically for the exhibition period, without confirming if this is feasible or compliant with the specialist's regulatory obligations. The correct answer is B. Advise the client that a formal policy endorsement detailing the increased coverage, the specific risk, the duration, and any associated premium adjustment must be processed and agreed upon in writing before the relocation occurs, in accordance with the Insurance Distribution Directive and FCA principles. Explanation. This scenario is professionally challenging because it requires the fine art insurance specialist to navigate the complexities of regulatory compliance while balancing the client's immediate needs with the insurer's obligations. The specialist must ensure that all advice and actions adhere strictly to the UK's regulatory framework for insurance, specifically as governed by the Financial Conduct Authority, FCA, and relevant legislation like the Insurance Distribution Directive, IDD, as implemented in the UK. The specialist's duty is to provide fair, clear, and not misleading information, acting in the best interests of the client. The correct approach involves a thorough review of the policy wording and relevant FCA guidance concerning policy amendments and endorsements. This approach prioritizes understanding the precise terms and conditions under which a policy can be varied, ensuring that any changes are documented correctly and that the client is fully informed of the implications, including any potential impact on coverage or premium. This aligns with the FCA's principles of treating customers fairly and ensuring that consumers receive suitable advice and products. Specifically, the IDD mandates that distributors, which includes insurance specialists acting in an advisory capacity, must provide clear, accurate, and understandable information about the product and the advice given. An incorrect approach that involves immediately agreeing to the client's request without verifying policy terms and regulatory requirements fails to uphold the duty of care owed to the client and breaches regulatory obligations. This could lead to the client believing they have coverage that is not actually in place, or that the policy has been amended in a way that is not permissible under the contract or regulations. Another incorrect approach, which is to inform the client that such a change is impossible without first consulting the policy and relevant regulations, is also professionally deficient. While caution is necessary, a complete refusal to explore options without due diligence can be seen as unhelpful and not in the client's best interest, potentially missing a valid solution that could be achieved through a formal endorsement or amendment process. A further incorrect approach, such as suggesting a verbal agreement to the change, is highly problematic. Insurance contracts, especially material amendments, require clear written documentation to be legally binding and to provide a definitive record for both parties. Verbal agreements are notoriously difficult to prove and are generally insufficient for significant policy alterations, exposing both the client and the insurer to disputes and regulatory scrutiny. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the client's request and its implication. 2. Consult the existing policy documentation to understand current terms and conditions. 3. Review relevant regulatory guidance, e.g., FCA Handbook IDD requirements pertaining to policy amendments, endorsements, and client communication. 4. Determine the appropriate procedure for accommodating the request, which may involve a formal endorsement, a new policy, or a declinature if the request is uninsurable or non-compliant. 5. Clearly communicate the findings, options, and implications to the client in a fair, clear, and not misleading manner. 6. Ensure all agreed-upon changes are properly documented and executed according to regulatory and contractual requirements. Question 6. Benchmark analysis indicates that fine art insurance underwriters must meticulously assess risk while adhering to stringent regulatory frameworks. When evaluating a proposal for a rare Renaissance sculpture, which underwriting approach best aligns with regulatory compliance and ethical best practices in the absence of specific, quantifiable risk factors related to the artwork's condition or security. Option A. Prioritizing an assessment of the artist's nationality and the artwork's historical provenance as primary determinants of risk and premium. Option B. Focusing on independent appraisals from accredited art experts, verifying the artwork's condition through detailed reports, and evaluating the proposed security and environmental controls for its storage and display. Option C. Relying solely on the insured's declared valuation of the sculpture without independent verification or risk assessment. Option D. Basing the underwriting decision primarily on the perceived cultural significance and market prestige associated with the artist and the artwork. The correct answer is A. Prioritizing an assessment of the artist's nationality and the artwork's historical provenance as primary determinants of risk and premium. Explanation. This scenario is professionally challenging because it requires an underwriter to balance the need to accurately assess risk for a fine art insurance policy with the potential for subjective valuation and the ethical imperative to avoid discriminatory practices. The underwriter must navigate the complexities of art appraisal, provenance, and market volatility while adhering strictly to regulatory guidelines that prohibit unfair discrimination. The correct approach involves a thorough and objective assessment of the artwork's intrinsic value, condition, security, and the proposed storage and display environment. This includes verifying provenance, obtaining independent appraisals from qualified experts, and evaluating the insured's security measures. This approach is ethically sound and regulatorily compliant because it focuses on quantifiable risk factors and avoids reliance on protected characteristics. It aligns with the principles of fair underwriting, ensuring that premiums are based on the actual risk presented by the artwork and its circumstances, rather than on arbitrary or discriminatory criteria. This adheres to the spirit and letter of regulations designed to prevent unfair treatment of policyholders. An incorrect approach that relies on the artist's nationality or the artwork's country of origin as a primary underwriting factor is ethically flawed and regulatorily non-compliant. Such a practice constitutes unfair discrimination, as it penalizes an individual or asset based on characteristics unrelated to the inherent risk of insuring the artwork itself. Regulations typically prohibit discrimination based on race, religion, national origin, or other protected classes. Similarly, an approach that prioritizes the perceived prestige of the artist or artwork over objective valuation and risk assessment is problematic. While market perception influences value, it should not supersede a rigorous analysis of the physical condition, security, and provenance of the piece. This can lead to mispricing of risk and potentially discriminatory outcomes if prestige is implicitly linked to protected characteristics. Finally, an approach that solely relies on the insured's stated value without independent verification or risk assessment is negligent and fails to meet underwriting standards. It exposes the insurer to significant adverse selection and potential fraud, and it is not a responsible or compliant method for determining policy terms and premiums. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the applicable regulatory framework. This involves identifying all prohibited bases for discrimination and understanding the requirements for fair and objective risk assessment. The next step is to gather all relevant, objective data pertaining to the artwork and its proposed insurance. This includes expert appraisals, condition reports, and details about security and environmental controls. The underwriter must then analyze this data through the lens of risk, considering factors such as fragility, susceptibility to damage, market volatility, and the effectiveness of protective measures. Any decision regarding policy terms, conditions, or premiums must be demonstrably linked to these objective risk factors and be free from any influence of protected characteristics or subjective biases. Question 7. Market research demonstrates that collectors often engage in complex arrangements for acquiring and displaying fine art. A client presents a scenario where they are temporarily holding a valuable sculpture on behalf of a foreign trust, with a formal agreement to purchase it at a future date. But they have no immediate legal title and are not yet financially committed to the purchase beyond a nominal holding deposit. They wish to insure the sculpture against damage during transit and while in their temporary care. Which of the following best represents the assessment of insurable interest in this situation under UK regulatory frameworks? Option A. The client possesses insurable interest due to their physical control and the potential for future ownership, as they are acting in good faith to secure the artwork. Option B. The client possesses insurable interest due to their role as a custodian and the responsibility they have assumed for the artwork's safekeeping, which implies a duty of care that could lead to financial repercussions if breached. Option C. The client possesses insurable interest because the holding deposit, however small, signifies a financial commitment and therefore a potential for loss. Option D. The client does not possess insurable interest because they lack legal title and a direct financial stake in the artwork at the time of potential loss, as their commitment is contingent and not yet absolute. The correct answer is A. The client possesses insurable interest due to their physical control and the potential for future ownership, as they are acting in good faith to secure the artwork. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of insurable interest within the specific regulatory framework governing fine art insurance in the UK, as overseen by the Financial Conduct Authority, FCA, and guided by industry best practices, such as those promoted by the Chartered Insurance Institute, CI, and the Civil Aviation Authority, CA, for aviation-specific aspects if applicable, though for fine art, the FCA and general insurance law are paramount. The core difficulty lies in distinguishing between a mere possessory right or a speculative interest and a genuine financial stake that would be recognized legally as insurable. A failure to correctly identify insurable interest can lead to void policies, disputes, and regulatory sanctions. The correct approach involves a thorough assessment of the potential policyholder's legal or equitable relationship with the artwork, demonstrating a financial loss would occur if the artwork were damaged or lost. This aligns with the fundamental principle of indemnity in insurance, ensuring that insurance is not a form of gambling, but a mechanism for financial protection against proven loss. Under UK law, insurable interest must exist at the time of the loss, and for life assurance at the inception of the policy. For property insurance, including fine art, the interest must be present at both points. This means the policyholder must stand to suffer a direct financial detriment. An incorrect approach that assumes insurable interest exists solely based on physical possession without a legal right to the artwork is professionally unacceptable. This fails to meet the legal requirement of a financial stake and could be seen as facilitating speculative insurance, which is against public policy and FCA principles. Similarly, an approach that considers a mere expectation of future benefit without a legally enforceable right as sufficient insurable interest is flawed. Insurance contracts are based on existing financial relationships, not speculative future gains. Finally, an approach that relies on the artwork's sentimental value alone to establish insurable interest is also incorrect. While sentiment is important to art owners, insurance law requires a quantifiable financial loss, not an emotional one. Professionals should adopt a decision-making process that begins with a clear understanding of the client's relationship to the artwork. This involves asking probing questions about ownership, legal title, any outstanding loans or liens, and the client's potential financial exposure. They must then cross-reference this information against the legal definition of insurable interest as established by UK insurance law and FCA guidance. If there is any doubt, seeking legal advice or declining to insure until the insurable interest is clearly established is the prudent course of action. Question 8. Cost-benefit analysis shows that while a generalized approach to fine art insurance underwriting might seem efficient, a more nuanced strategy is often required. Considering the distinct preservation needs and valuation complexities of various mediums, which of the following approaches best aligns with professional best practices for a fine art insurance specialist operating under UK regulations? Option A. Relying solely on the insured's declared value for each artwork without conducting independent verification or seeking expert appraisal, assuming the insured has a vested interest in accurate valuation. Option B. Utilizing a broad exclusion clause for all forms of environmental damage, such as light or humidity, across all art mediums to simplify policy administration and reduce potential claims. Option C. Implementing a standardized underwriting process that applies a uniform risk assessment and valuation methodology across all art mediums, from paintings to sculptures and photography. Option D. Developing and applying medium-specific risk assessment protocols and valuation guidelines, engaging specialist appraisers where necessary to ensure accurate coverage and fair premium calculation for each distinct art form. The correct answer is C. Implementing a standardized underwriting process that applies a uniform risk assessment and valuation methodology across all art mediums, from paintings to sculptures and photography. Explanation: this scenario is professionally challenging because accurately assessing the risk and value of fine art, particularly when dealing with diverse mediums, requires specialized knowledge beyond general insurance principles. The inherent subjectivity in art valuation, coupled with the unique vulnerabilities of different mediums, e.g., fragility of sculpture, light sensitivity of photography, potential for damage to mixed media components, necessitates a nuanced approach to underwriting and claims handling. A failure to adequately understand these distinctions can lead to underinsurance, inadequate coverage, or inflated premiums, all of which are detrimental to both the insurer and the insured. The correct approach involves a detailed, medium-specific risk assessment and valuation. This entails engaging specialists or utilizing established methodologies that account for the unique characteristics of each medium. For painting, this might involve assessing the canvas, paint layers, and potential for environmental damage. For sculpture, it would consider material bronze, marble, wood, structural integrity, and handling risks. Photography requires attention to print type, preservation methods, and light exposure. Printmaking involves understanding edition numbers, paper quality, and potential for fading or damage. Mixed media demands an understanding of the interaction between various materials and their individual preservation needs. This detailed approach ensures that premiums accurately reflect the risk, and that coverage is sufficient to indemnify the insured in the event of a loss, aligning with the principles of indemnity and fair dealing mandated by regulatory frameworks governing insurance specialists. An incorrect approach that relies on a generalized risk assessment for all art, regardless of medium, fails to acknowledge the distinct vulnerabilities and valuation complexities. This can lead to mispricing of risk, potentially resulting in insufficient reserves for claims or excessive premiums for policyholders, which could be seen as a breach of fair treatment principles. Another incorrect approach might be to solely rely on the insured's stated value without independent verification or expert consultation. This neglects the insurer's responsibility to underwrite risk prudently and could lead to paying claims based on inflated values, impacting the insurer's financial stability and potentially violating solvency regulations. Furthermore, an approach that applies a blanket exclusion for certain types of damage without considering the specific medium's susceptibility would be ethically questionable and likely non-compliant with regulations requiring clear and fair policy terms. Professional decision-making in fine art insurance requires a commitment to continuous learning and the application of specialized expertise. When faced with diverse art mediums, professionals should adopt a systematic process. First, identify the specific medium and its inherent characteristics. Second, consult relevant valuation and risk assessment resources or experts for that medium. Third, tailor policy terms and conditions to address the identified risks. And finally, ensure transparent communication with the insured regarding coverage limitations and valuation methodology. This diligent and informed approach upholds professional standards and regulatory compliance. Question 9. Market research demonstrates a growing interest among private collectors in acquiring significant pieces of medieval art, including Byzantine icons, Romanesque sculptures, and Gothic illuminated manuscripts. A client, a wealthy individual with a burgeoning collection of such items, approaches your firm seeking comprehensive insurance coverage. The client has provided a list of acquisitions, but the provenance and condition reports are somewhat incomplete, and the pieces represent a range of periods and styles within medieval art. As a fine art insurance specialist, what is the most appropriate course of action to ensure accurate valuation and risk assessment for this specialized collection? Option A. Utilize an in-house valuation team with broad art expertise, but no specific specialization in medieval periods to expedite the assessment process. Option B. Rely on general art market indices and the client's provided purchase prices as the primary basis for valuation, assuming these reflect current market value. Option C. Accept the client's stated values for each item without independent verification, prioritizing client satisfaction and policy issuance speed. Option D. Engage a recognized appraiser specializing in medieval art. Conduct thorough due diligence on provenance and condition, and consult specialized art market data for comparable sales. The correct answer is D. Engage a recognized appraiser specializing in medieval art, conduct thorough due diligence on provenance and condition, and consult specialized art market data for comparable sales. Explanation: this scenario presents a professional challenge for a fine art insurance specialist due to the inherent complexities and subjective valuations associated with medieval art. The specialist must navigate the scarcity of comparable sales data, the potential for stylistic attribution disputes, and the need for expert appraisal, all while adhering to the regulatory framework governing insurance practices. The challenge lies in accurately assessing risk and value for unique, historical artifacts that may not fit neatly into standard insurance categories. Careful judgment is required to balance the client's desire for comprehensive coverage with the insurer's need for a well-underwritten policy. The correct approach involves a meticulous and multifaceted valuation process. This includes engaging a recognized medieval art appraiser with specific expertise in Byzantine, Romanesque, and Gothic periods, thoroughly documenting the provenance and condition of the artworks, and consulting specialized art market reports and auction records for similar, albeit rare, pieces. This approach is right because it aligns with the regulatory requirement to ensure that insurance policies are based on accurate and justifiable valuations. Ethically, it upholds the principle of utmost good faith by providing the insurer with a realistic assessment of the risk and the insured with appropriate coverage. Adherence to professional standards for art appraisal and insurance underwriting is paramount. An incorrect approach that relies solely on general art market trends or a broad estimate without specialized appraisal fails to meet regulatory standards for due diligence and accurate risk assessment. This could lead to underinsurance or overinsurance, both of which are detrimental to the client and the insurer and may violate principles of fair dealing. Another incorrect approach that prioritizes speed and cost saving by using an internal, non-specialized valuation team would be professionally unacceptable. This bypasses the critical need for expert opinion in a niche field like medieval art, potentially resulting in inaccurate valuations and exposing both parties to significant financial risk. It demonstrates a failure to exercise professional diligence and may contravene guidelines requiring specialist expertise for high-value or complex assets. A further incorrect approach that involves accepting the client's self-declared value without independent verification or expert consultation is also professionally unsound. This neglects the insurer's responsibility to underwrite risk prudently and could be seen as a breach of fiduciary duty, potentially leading to claims disputes and regulatory scrutiny. The professional decision-making process for similar situations should involve 1. Identifying the unique characteristics and potential risks of the insured asset. 2. Determining the appropriate level of expertise required for valuation and risk assessment. 3. Engaging qualified specialists where necessary, adhering to industry best practices and regulatory guidelines. 4. Documenting all steps taken in the valuation and underwriting process. 5. Communicating transparently with both the client and the insurer regarding the basis of the valuation and coverage. Question 10. Process analysis reveals that an underwriter is tasked with ensuring a valuable art collection located in a region experiencing significant political instability and security concerns. Direct, on-site physical inspection by the underwriter or their appointed surveyor is deemed too dangerous and logistically challenging. What is the most appropriate and compliant approach to hazard identification in this scenario? Option A. Proceed with underwriting based on the owner's assurances and a review of the collection's provenance, assuming that the inherent value of the art will deter theft or damage. Option B. Rely on detailed photographic and video evidence provided by the owner, supplemented by reports from reputable international art security consultants, and a thorough review of the property's security infrastructure and local risk assessments. Option C. Insist on a physical inspection by the underwriter, even if it requires significant security arrangements and potential delays, as this is the only way to truly assess the hazards. Option D. Underwrite the risk based on general knowledge of art insurance and typical hazards, without specific investigation into the unique circumstances of this collection and its location. The correct answer is B. Rely on detailed photographic and video evidence provided by the owner, supplemented by reports from reputable international art security consultants, and a thorough review of the property's security infrastructure and local risk assessments. Explanation. This scenario presents a professional challenge because the underwriter must balance the need to accurately assess risk for a high-value art collection with the practical limitations of on-site inspections in a politically unstable region. The core of the challenge lies in identifying and mitigating hazards that could lead to significant loss, while adhering to regulatory requirements for due diligence and risk assessment, without compromising the safety of personnel or the feasibility of the insurance placement. Careful judgment is required to determine the most effective and compliant methods for hazard identification under these constraints. The correct approach involves a multifaceted strategy that prioritizes verifiable information and expert consultation. This includes leveraging remote sensing technologies, engaging local security and art handling specialists with proven track records, and conducting thorough background checks on all parties involved. This approach is justified by regulatory frameworks that mandate a prudent approach to risk assessment and underwriting. Specifically, regulations governing insurance underwriting e.g., those enforced by the Financial Conduct Authority in the UK, assuming this is the relevant jurisdiction for the Fine Art Insurance Specialist exam, require insurers to conduct adequate due diligence to understand the risks they are insuring. Relying on credible, albeit indirect, sources of information and expert opinions, coupled with robust verification processes, allows the underwriter to fulfill this duty of care. Ethical considerations also support this approach, as it demonstrates a commitment to responsible underwriting and protecting the interests of both the insured and the insurer. An incorrect approach would be to proceed with underwriting based solely on the owner's assurances and readily available but potentially superficial documentation. This fails to meet the regulatory requirement for thorough due diligence. The risk of misrepresentation or omission of critical hazards is high, potentially leading to underpriced premiums and significant financial exposure for the insurer. Ethically, this approach demonstrates a lack of professional diligence and could be seen as negligent. Another incorrect approach would be to insist on a physical inspection by the underwriter or a direct employee, regardless of the prevailing security conditions. This disregards the paramount importance of personnel safety and could be seen as an unreasonable demand that jeopardizes the insurance placement entirely. While a physical inspection is ideal, regulatory frameworks and ethical considerations do not mandate actions that place individuals in undue danger. The professional decision-making process in such situations requires a risk-based assessment of information-gathering methods. Professionals should first identify the critical information needed for underwriting. Then, they should evaluate various methods for obtaining that information, considering their effectiveness, cost, feasibility, and importantly, the associated risks. When direct methods are too risky or impractical, the focus shifts to indirect but verifiable methods, such as expert reports, remote sensing, and thorough background checks, ensuring that the chosen methods still provide a sufficient basis for informed underwriting decisions, in compliance with regulatory standards. Question 11. What factors determine the appropriate insurance valuation of Renaissance artworks, considering the distinct artistic and historical characteristics of the early, high, and late Renaissance periods? Option A. The artist's overall fame and the number of their works that have recently sold at auction, regardless of the specific period or the individual artwork's quality. Option B. The stylistic innovations, patronage influences, improvements specific to each Renaissance period, alongside the artwork's condition and artist's reputation. Option C. The physical condition of the artwork and the cost of its restoration, with minimal consideration for its historical or artistic significance. Option D. The current market demand for artworks by artists active during the Renaissance, irrespective of the specific period or stylistic nuances. The correct answer is B. The stylistic innovations, patronage influences, and improvements specific to each Renaissance period, alongside the artwork's condition and artist's reputation. Explanation. This scenario is professionally challenging because assessing the impact of Renaissance art's stylistic evolution on insurance valuations requires a nuanced understanding that goes beyond simple market price. It demands an appreciation for the qualitative shifts in artistic technique, patronage, and cultural significance that define early, high, and late Renaissance periods. Misjudging these factors can lead to underinsurance, leaving the artwork inadequately protected, or overinsurance, resulting in unnecessarily high premiums for the policyholder. The core challenge lies in translating art historical knowledge into a quantifiable insurance risk assessment, adhering to the principles of indemnity and fair valuation, as mandated by the regulatory framework for fine art insurance specialists. The correct approach involves a comprehensive impact assessment that considers the stylistic evolution, patronage, and provenance of Renaissance art. This approach is right because it directly addresses the intrinsic value drivers of these artworks. Early Renaissance art, for instance, is characterized by its foundational innovations in perspective and humanism, while high Renaissance art represents a peak of technical mastery and idealized form. Late Renaissance art often exhibits greater complexity, emotional intensity, and a departure from strict classical ideals. Each period's distinct characteristics influence its rarity, historical importance, and thus its insurance value. Adhering to regulatory guidelines for fair valuation requires an insurer to consider all relevant factors that contribute to an artwork's worth, not just its current market price. This holistic view ensures that the policy accurately reflects the potential loss to the insured. An incorrect approach that focuses solely on the artist's name and current auction results fails to capture the full spectrum of value. While an artist's reputation is a significant factor, it does not account for the specific period's artistic innovations or the unique condition and provenance of an individual piece. This approach risks undervaluing works from less commercially popular but historically significant periods or overvaluing pieces that, despite the artist's fame, may not represent the pinnacle of their oeuvre or the period's artistic achievements. This is a regulatory failure as it deviates from the principle of indemnity by not accurately reflecting the potential loss. Another incorrect approach that prioritizes only the physical condition of the artwork, neglecting its historical context and artistic merit, is also professionally unacceptable. While condition is crucial for valuation, it is only one component. A perfectly preserved but artistically minor work would be overvalued if condition were the sole determinant. Conversely, a work with minor condition issues but immense historical and artistic significance might be undervalued. This approach fails to meet the regulatory requirement of a comprehensive valuation that considers all aspects contributing to an artwork's worth, leading to an inaccurate indemnity. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the specific period and stylistic characteristics of the Renaissance art in question. 2. Research the artist's oeuvre within that period, noting key developments and innovations. 3. Investigate the artwork's provenance, exhibition history, and any scholarly attributions. 4. Assess the physical condition of the artwork, noting any restoration or damage. 5. Synthesize this information to determine the artwork's intrinsic and market value, considering its historical significance, rarity, and artistic merit, in line with regulatory requirements for fair and accurate valuation. Question 12. Examination of the data shows that a policyholder has contacted the fine art insurance specialist to report a significant water leak in their gallery, which has affected several high-value paintings. The specialist receives this notification late on a Friday afternoon. Which of the following represents the most appropriate immediate action to take regarding the first notice of loss, FNOL? Option A. Immediately inform the policyholder that the policy may not cover water damage, and that a full investigation will be required before any coverage can be confirmed. Option B. Delay acknowledging the FNOL until Monday morning to allow for a preliminary review of the policy wording and internal resources. Option C. Forward the FNOL to a third-party claims management firm for them to handle all initial contact and assessment without direct specialist involvement. Option D. Acknowledge receipt of the FNOL, confirm key details provided, and inform the policyholder that an adjuster will be assigned to contact them within 2 business days to discuss the next steps. Correct answer is D. Acknowledge receipt of the FNOL, confirm key details provided, and inform the policyholder that an adjuster will be assigned to contact them within 2 business days to discuss the next steps. Explanation. This scenario is professionally challenging because the first notice of loss, FNOL, is the critical initial touchpoint in the claims process for fine art insurance. Delays or inaccuracies in reporting can significantly impact the insurer's ability to investigate, mitigate further damage, and assess liability, potentially leading to increased claim costs and reputational damage. The specialist must balance the policyholder's need for prompt assistance with the insurer's regulatory obligations and operational requirements. The The correct approach involves immediately acknowledging receipt of the FNOL, confirming essential details, and initiating the claims investigation process in accordance with the policy terms and relevant regulatory guidelines. This demonstrates responsiveness, adherence to contractual obligations, and compliance with the duty of care owed to the policyholder. Specifically, under UK regulations and CISI guidelines for insurance professionals, timely and accurate handling of claims information is paramount. This includes prompt communication with the policyholder to gather necessary details and inform them of the next steps, thereby fulfilling the insurer's obligations under the Insurance Conduct of Business Sourcebook, ICOBS, and general principles of good faith and fair dealing. An incorrect approach of delaying the acknowledgement and initial assessment of the FNOL, perhaps due to internal workload or a lack of immediate clarity on coverage, fails to meet the expected standards of service and regulatory compliance. This can be seen as a breach of ICOBS 7.1, which mandates that firms must act honestly, fairly, and professionally in accordance with the best interests of their customers. Furthermore, such a delay could prejudice the insurer's ability to investigate effectively, potentially leading to a breach of the duty of utmost good faith. Another incorrect approach of immediately denying coverage based on a preliminary, incomplete understanding of the loss, without a thorough investigation, is also professionally unacceptable. This bypasses the investigative process required to determine the validity of the claim and the extent of the insurer's liability. It contravenes the principles of fair claims handling and could be interpreted as a failure to treat the customer fairly, potentially leading to regulatory sanctions and reputational harm. A further incorrect approach of outsourcing the entire FNOL process to a third party without adequate oversight or direct communication channels with the policyholder can also be problematic. While outsourcing can be efficient, the ultimate responsibility for claims handling and communication rests with the insurer. A lack of direct engagement can lead to miscommunication, delays, and a perception that the policyholder is not being adequately supported, which is contrary to the principles of good customer service and regulatory expectations. The professional decision-making process for similar situations should involve 1. Prioritizing the FNOL as a critical event requiring immediate attention. 2. Establishing clear internal protocols for acknowledging and processing FNOL within defined timeframes. 3. Ensuring that all staff involved are adequately trained on policy terms, regulatory requirements e.g. ICOBS, and customer service standards. 4. Maintaining open and transparent communication with the policyholder throughout the claims process. 5. Conducting thorough investigations before making coverage decisions. Question 13. When evaluating a claim for damage to a valuable painting, which approach best balances the policyholder's desire for restoration with the insurer's obligations and the need to preserve the artwork's integrity and insured value, adhering to the regulatory framework for fine art insurance specialists? Option A. Obtain detailed written proposals from qualified conservators outlining proposed treatments, materials, expected outcomes, and potential risks, and review these for alignment with industry, best practices, and policy terms before recommending a course of action to the insurer. Option B. Defer all decisions regarding the specific conservation methods and materials entirely to the policyholder, trusting their judgment and the conservator's recommendations without independent specialist review. Option C. Approve the restoration based on the policyholder's verbal assurance that they have selected a highly reputable conservator. Option D. Authorize the most comprehensive and expensive restoration method proposed by the conservator immediately to ensure the best possible outcome for the artwork. The correct answer is A. Obtain detailed written proposals from qualified conservators outlining proposed treatments, materials, expected outcomes, and potential risks, and review these for alignment with industry, best practices, and policy terms before recommending a course of action to the insurer. Explanation. This scenario presents a professional challenge because the fine art insurance specialist must balance the policyholder's desire to restore a damaged artwork with the insurer's financial interests and the need to maintain the artwork's integrity and value. The specialist's role is to ensure that any conservation or restoration work undertaken is appropriate, documented, and does not inadvertently diminish the insured value of the artwork, potentially leading to disputes or underinsurance. Careful judgment is required to assess the proposed methods, the qualifications of the conservator, and the potential impact on the artwork's market value and historical significance. The correct approach involves obtaining detailed written proposals from qualified conservators that clearly outline the proposed treatment, materials, expected outcomes, and potential risks. This documentation should be reviewed by the specialist to ensure it aligns with industry best practices and the terms of the insurance policy. The specialist must then communicate these findings and recommendations to the insurer, providing a clear rationale for approving or rejecting specific aspects of the proposed work. This ensures transparency, accountability, and adherence to the principle of indemnity, where the insurer compensates the policyholder for their loss without creating a profit. Regulatory frameworks, such as those governing insurance claims and professional conduct for specialists, mandate thorough due diligence and accurate assessment of damage and repair costs. An incorrect approach of approving restoration based solely on the policyholder's verbal assurance of a conservator's expertise is professionally unacceptable. This fails to meet the regulatory requirement for documented evidence supporting claims and repairs. It bypasses the necessary due diligence to verify the conservator's qualifications and the appropriateness of the proposed work, potentially leading to the insurer paying for substandard or unnecessary treatments. This also violates the ethical obligation to act with integrity and competence. Another incorrect approach of immediately authorizing the most expensive restoration method without a comparative analysis of alternatives is also professionally flawed. This could lead to the insurer paying more than is necessary to achieve a satisfactory restoration, potentially breaching the principle of indemnity. It demonstrates a lack of cost-effectiveness and due diligence in managing the insurer's resources and could be seen as a failure to act in the best interests of all parties involved. A further incorrect approach of deferring all decision-making regarding conservation methods entirely to the policyholder, regardless of the specialist's own expertise or regulatory obligations, is unacceptable. While the policyholder has an interest in their property, the specialist has a professional and regulatory duty to provide expert advice and oversight. Abdicating this responsibility can lead to poor outcomes, disputes, and a failure to uphold the insurer's obligations and the policy's terms. The professional decision-making process for similar situations should involve a systematic evaluation of the proposed conservation and restoration work. This includes verifying the qualifications and reputation of the conservator, obtaining detailed written proposals, assessing the proposed methods against industry standards and the artwork's specific needs, evaluating the cost-effectiveness of different approaches, and documenting all communications and decisions. The specialist must act as an informed intermediary, ensuring that the restoration process is both technically sound and financially responsible, thereby upholding the principles of insurance and professional ethics. Question 14. System analysis indicates that a client wishes to insure a collection of ancient Egyptian artifacts, including scarab amulets and a funerary mask, claiming they were acquired through private inheritance over several decades. The client provides a handwritten note from a deceased relative as the primary evidence of acquisition. As a fine art insurance specialist operating under UK regulations and CISI guidelines, what is the most appropriate approach to assessing the insurability of this collection? Option A. Decline coverage outright due to the lack of formal documentation and the potential for illicit provenance. Option B. Advise the client to obtain a valuation from a reputable appraiser and proceed with insuring the collection based on the valuation, assuming the appraiser implicitly verifies provenance. Option C. Request detailed provenance documentation, including any available export licenses from Egypt, purchase records, and previous exhibition history, and consult relevant international conventions and UK legislation regarding cultural property. Option D. Insure the collection immediately, as private inheritance is generally accepted as a valid form of acquisition for older items. The correct answer is D. Insure the collection immediately, as private inheritance is generally accepted as a valid form of acquisition for older items. Explanation. This scenario is professionally challenging because it requires a fine art insurance specialist to navigate the complexities of provenance, ownership, and ethical considerations when insuring artifacts from ancient civilizations. The inherent difficulty lies in verifying the legal and ethical acquisition of such items, especially given the historical context of archaeological discoveries and potential for illicit trade. Careful judgment is required to balance the client's desire for coverage with the insurer's responsibility to avoid insuring stolen or illegally obtained property, which could have significant legal and reputational repercussions. The correct approach involves a thorough due diligence process focused on establishing clear and verifiable provenance for the Egyptian artifacts. This includes requesting and meticulously examining all available documentation, such as purchase receipts, export licenses from Egypt, and previous exhibition records. The specialist must also be aware of and adhere to international conventions and national laws governing the trade and ownership of cultural property, such as the UNESCO Convention on the Means of Prohibiting and Preventing the Illicit Import, Export and Transfer of Ownership of Cultural Property, 1970, and relevant UK legislation. This approach ensures compliance with regulatory frameworks, upholds ethical standards by refusing to insure items with questionable origins, and protects the insurer from potential legal liabilities and reputational damage. An incorrect approach would be to proceed with insuring the artifacts based solely on the client's assurances and the perceived value of the items. This fails to acknowledge the legal and ethical obligations to verify provenance and could lead to insuring stolen or illegally exported cultural property. Such an action would violate regulatory requirements concerning due diligence and anti-money laundering, and ethical guidelines that prohibit facilitating the trade of illicit antiquities. Another incorrect approach would be to dismiss the provenance concerns outright due to the age of the artifacts, assuming that historical ownership automatically legitimizes current possession. This overlooks the fact that even ancient artifacts can be subject to claims of ownership by their country of origin, especially if they were removed illegally. This approach neglects the evolving legal landscape and international agreements that aim to protect cultural heritage. A further incorrect approach would be to accept a simplified bill of sale from a private collector without further investigation, especially if the collector is not a recognized dealer or institution. This demonstrates a lack of professional skepticism and a failure to conduct adequate due diligence, potentially exposing the insurer to insuring items that are part of an illicit trade network. The professional decision-making process for similar situations should involve a systematic risk assessment. This begins with identifying potential red flags related to provenance, such as a lack of documentation, a recent and opaque acquisition history, or the item's origin from a region known for illicit antiquities trafficking. The specialist should then engage in a rigorous verification process, seeking expert opinions if necessary, and consulting relevant legal and regulatory guidelines. If doubts about provenance persist and cannot be resolved through due diligence, the professional, ethical, and regulatory imperative is to decline coverage rather than risk insuring items with questionable legal or ethical standing. Question 15. Stakeholder feedback indicates a growing concern among fine art collectors regarding the cost of implementing and maintaining optimal climate control systems for their collections. A client has proposed a climate control solution that is significantly less expensive than industry benchmarks, citing its perceived efficiency. As a fine art insurance specialist, what is the most appropriate approach to evaluating this proposal to ensure adequate protection for the insured artwork while remaining mindful of policyholder costs? Option A. Mandate the installation of the most advanced and expensive climate control system available, regardless of the specific needs of the artwork or the client's budget, to eliminate any potential environmental risk. Option B. Accept the client's proposed system at face value due to its lower cost, assuming the client has adequately researched its suitability for their collection. Option C. Advise the client that climate control is solely their responsibility, and that the insurer will not be involved in evaluating specific system proposals. Option D. Conduct an independent assessment by a qualified art conservator to verify the proposed system's ability to maintain the specific environmental parameters required for the artwork's preservation, and compare this to the insurer's risk assessment guidelines. The correct answer is D. Conduct an independent assessment by a qualified art conservator to verify the proposed system's ability to maintain the specific environmental parameters required for the artwork's preservation, and compare this to the insurer's risk assessment guidelines. Explanation. This scenario is professionally challenging because it requires balancing the client's desire for cost efficiency with the insurer's fiduciary duty to protect the insured asset and manage risk. The insurer must ensure that the proposed climate control measures are not only cost-effective, but also demonstrably adequate to prevent damage to the fine art, thereby upholding the terms of the policy and regulatory expectations regarding prudent risk management. The correct approach involves a thorough, evidence-based assessment of the artwork's specific environmental needs and the proposed climate control system's ability to meet those needs consistently. This includes consulting with art conservation experts to validate the proposed system's efficacy and reliability. This approach is right because it aligns with the principles of prudent underwriting and risk mitigation expected under the regulatory framework for insurance specialists. Specifically, it demonstrates due diligence in assessing and managing the risks associated with environmental factors, which is a core responsibility. By ensuring the climate control system is appropriate and effective, the insurer fulfills its obligation to provide coverage that is based on a sound understanding of the risks involved and to avoid potential claims arising from preventable environmental damage. This proactive and expert-driven assessment is crucial for maintaining the integrity of the insurance contract and protecting both the client's investment and the insurer's financial stability. An incorrect approach would be to accept the client's proposed system solely based on its lower cost without independent verification of its suitability for the specific fine art. This fails to meet the insurer's responsibility to conduct a comprehensive risk assessment, could lead to inadequate protection for the artwork, increasing the likelihood of damage and subsequent claims, which would be a failure in underwriting and risk management. Another incorrect approach would be to mandate the most expensive, state-of-the-art climate control system without considering the proportionality of the cost to the actual risk reduction achieved for the specific artwork. While seemingly robust, this approach might not be commercially viable for the client and could be seen as an overreach if a less costly but equally effective solution exists. It fails to strike a balance between risk mitigation and economic feasibility, which is an important consideration in client relationships and policy terms. A further incorrect approach would be to defer entirely to the client's judgment on climate control, assuming their expertise is sufficient. This absolves the insurer of its own responsibility to assess and underwrite the risk, potentially exposing it to claims that could have been avoided through proper due diligence. The insurer cannot delegate its core risk assessment duties to the policyholder. Professionals should approach such situations by first understanding the specific vulnerabilities of the fine art to environmental fluctuations. This understanding should then inform the evaluation of any proposed climate control solutions, prioritizing efficacy and consistency over mere cost. Engaging independent conservation experts is a critical step in validating the technical suitability of the proposed measures. This systematic, evidence-based process ensures that decisions are grounded in a thorough understanding of the risk and are compliant with regulatory expectations for prudent insurance practice. Question 16. Regulatory review indicates that a fine art insurance specialist is assessing a collection that includes a 17th-century oil portrait, a contemporary watercolor landscape, a limited edition bronze sculpture, and a series of early 20th-century lithographs. The specialist is tasked with recommending appropriate insurance coverage for each piece. Which of the following approaches best aligns with the regulatory framework for fine art insurance specialists in ensuring accurate valuation and risk assessment for these diverse techniques? Option A. Focusing insurance recommendations solely on the potential for theft or catastrophic damage, neglecting the specific risks associated with the conservation and handling of different artistic mediums. Option B. Recommending coverage based on the overall value of the collection without differentiating between the individual artworks or their mediums, and applying a single, generic insurance policy. Option C. Conducting an independent appraisal for each artwork, considering the specific material properties, creation techniques, and known vulnerabilities of oil paintings, watercolors, bronze castings, and lithographs to determine appropriate coverage and deductibles. Option D. Applying a uniform valuation methodology and standard deductible across all artworks, assuming the artist's stated value is accurate for each piece. The correct answer is D. Applying a uniform valuation methodology and standard deductible across all artworks, assuming the artist's stated value is accurate for each piece. Explanation. This scenario presents a professional challenge due to the inherent complexities and potential for misrepresentation in valuing and insuring fine art, particularly when dealing with different artistic techniques. The specialist must navigate the nuances of how the creation process impacts an artwork's value, authenticity, and susceptibility to damage, all while adhering to the specific regulatory framework governing fine art insurance specialists. A deep understanding of these techniques is crucial for accurate risk assessment, appropriate policy wording, and fair claims handling, preventing both underinsurance and overinsurance, and ensuring compliance with disclosure and due diligence requirements. The correct approach involves a thorough understanding of the specific characteristics of oil painting, watercolor, bronze casting, and lithography, and how these characteristics influence their insurance needs. This includes recognizing that oil paintings, due to their layered pigments and varnishes, may have different conservation needs and susceptibility to surface damage compared to watercolors, which are more vulnerable to moisture and light fading. Bronze castings require consideration of patination, structural integrity, and potential for breakage or theft, while lithographs, as prints, necessitate an understanding of edition size, paper quality, and potential for creasing or tearing. The specialist must then apply this knowledge to accurately assess the artwork's current market value, identify potential risks specific to its medium, and recommend appropriate coverage limits and exclusions, ensuring all information provided to the client and insurer is precise and compliant with regulatory standards for disclosure and professional conduct. An incorrect approach would be to treat all artworks, regardless of their medium, as having uniform insurance requirements. This fails to acknowledge the distinct vulnerabilities and valuation factors associated with oil paintings, watercolors, bronze castings, and lithographs. Such a generalized approach could lead to inadequate coverage for specific risks, e.g., underinsuring a delicate watercolor against moisture damage, or overinsurance, both of which violate the duty of care and potentially contravene regulations requiring accurate risk assessment and fair representation of policy terms. Another incorrect approach would be to rely solely on the artist's stated value without independent verification or consideration of the medium's impact on that value. This bypasses the specialist's responsibility to conduct due diligence and provide an informed opinion, potentially leading to policies based on inflated or inaccurate valuations. This failure to exercise professional judgment and verify information can breach regulatory requirements for competence and diligence. A further incorrect approach would be to apply a standard deductible or valuation method across all mediums without considering how the technique might influence the potential for damage or the cost of restoration. For instance, a deductible that is appropriate for a large bronze sculpture might be disproportionately high for a small, delicate watercolor, leading to an unfair policy structure. This demonstrates a lack of specialized knowledge and a failure to tailor insurance solutions to the specific risks presented by each medium, which is a core expectation for a fine art insurance specialist. The professional decision-making process for similar situations should involve a systematic evaluation of the artwork's medium, condition, provenance, and market value. Specialists must consult relevant industry standards, conservation reports, and market data specific to the medium. They should then clearly articulate the identified risks and the rationale for recommended coverage to the client, ensuring transparency and informed consent. Any assumptions or generalizations must be explicitly stated and justified, with a clear understanding of the regulatory obligations to act with integrity and competence. Question 17. Cost-benefit analysis shows that investing in specialized art historical research and consultation can significantly reduce the likelihood of claims disputes arising from misinterpretations of artwork descriptions. A client presents a policy renewal for a painting described as attributed to a follower of Rembrandt, with later restorations. The fine art insurance specialist needs to determine the most appropriate course of action to ensure accurate valuation and risk assessment under UK regulatory guidelines. Option A. Advise the client that the description is too vague and suggest they obtain a simplified condition report from a local framer before proceeding with the renewal. Option B. Immediately request a new, comprehensive appraisal from a certified art expert, focusing on the provenance and condition, and reevaluate the policy terms based on this new appraisal, paying close attention to the distinction between attributed to and by, and the impact of later restorations on the artwork's authenticity and market value. Option C. Proceed with renewal, but add a rider to the policy stating that the valuation is based solely on the client's provided description, and that the insurer will not be liable for any discrepancies found in the future. Option D. Accept the description as provided and renew the policy based on the existing valuation, assuming the client's description is accurate and sufficient for renewal. The correct answer is D. Accept the description as provided and renew the policy based on the existing valuation, assuming the client's description is accurate and sufficient for renewal. Explanation. This scenario is professionally challenging because it requires the fine art insurance specialist to navigate the nuances of art terminology to accurately assess risk and value, directly impacting the policy's terms and the client's coverage. Misinterpreting terminology can lead to underinsurance or overinsurance, both of which have significant financial and ethical implications. The specialist must demonstrate a deep understanding of art historical contexts and the specific language used to describe artworks and their condition. The correct approach involves meticulously examining the provenance documentation and the expert appraisal, cross-referencing the descriptive terms used with established art historical lexicon and conservation reports. This ensures that the policy accurately reflects the artwork's condition, period, artist, and any unique characteristics that influence its value and insurability. For instance, understanding the difference between a studio copy and an original work is critical for valuation and risk assessment. Regulatory compliance in the UK, particularly under the Financial Conduct Authority, FCA, handbook and relevant industry guidelines like those from the Chartered Insurance Institute, CI, or the British Insurance Brokers Association, BIBA, mandates that insurance professionals act with integrity, skill, care, and diligence, and provide advice suitable for the client's needs. Accurate terminology is fundamental to fulfilling these obligations, ensuring fair treatment of customers and preventing misrepresentation. An incorrect approach that relies solely on the client's subjective description without independent verification fails to meet the duty of care. This could lead to a policy that does not adequately cover the artwork's true value or risks, potentially breaching FCA principles regarding treating customers fairly. Another incorrect approach, which dismisses the importance of specific art terms as mere stylistic preferences, ignores the established conventions within the art market and insurance industry that assign precise meanings to these terms. This oversight can result in misclassification of the artwork, leading to incorrect premium calculations and inadequate coverage, thereby failing to uphold the professional standards expected of a fine art insurance specialist. Professionals should adopt a decision-making framework that prioritizes thorough due diligence. This involves actively seeking clarification on any ambiguous art terminology, consulting with art historians or conservators when necessary, and ensuring all policy documentation precisely reflects the agreed-upon understanding of the artwork. The process should be iterative, involving a review of all provided information, independent research, and clear communication with the client and any relevant third parties to confirm understanding and accuracy before policy issuance. Question 18. Operational review demonstrates that a client wishes to insure a recently acquired painting, described as a Renaissance portrait of a noblewoman. The client provides a purchase price and a preliminary valuation from the seller. As a fine art insurance specialist, what is the most appropriate initial course of action to ensure accurate and responsible insurance coverage? Option A. Immediately recommend a policy based on the general market value of Renaissance portraiture, assuming similar risk profiles for all works from that period. Option B. Initiate a detailed assessment of the painting's provenance, condition, and historical context, potentially engaging art historians and conservators, to establish an accurate valuation and identify any specific risks or conservation needs before finalizing the policy. Option C. Accept the client's provided purchase price and seller's valuation as the basis for the insurance policy, proceeding with coverage based on this information. Option D. Advise the client that the insurance policy will only cover the purchase price, as any valuation beyond that is speculative and cannot be insured without further independent appraisal. The correct answer is C. Accept the client's provided purchase price and seller's valuation as the basis for the insurance policy, proceeding with coverage based on this information. Explanation. This scenario presents a professional challenge because it requires the fine art insurance specialist to balance the client's immediate financial needs with the long-term preservation of a culturally significant artifact. The specialist must navigate the complexities of art history to accurately assess the value and condition of the artwork, ensuring that any proposed insurance solution does not inadvertently lead to its degradation or misrepresentation. The core of the challenge lies in the ethical obligation to advise the client responsibly, grounded in a thorough understanding of the artwork's historical context and material integrity, which directly impacts its insurability and valuation. The correct approach involves a comprehensive assessment of the artwork's provenance, condition, and historical significance, consulting with art historians and conservators as necessary. This aligns with the regulatory framework for fine art insurance specialists, which mandates due diligence and the provision of accurate, informed advice. Ethically, this approach prioritizes the preservation of cultural heritage and upholds the specialist's duty of care to the client by ensuring the insurance policy accurately reflects the artwork's true value and risks, thereby preventing potential disputes or financial losses due to misrepresentation or inadequate coverage. An incorrect approach would be to solely rely on the client's provided valuation without independent verification. This fails to meet the regulatory requirement for due diligence and could lead to an inaccurate policy, exposing both the insurer and the insured to risk. Ethically, it breaches the duty of care by not acting in the client's best interest, potentially leading to underinsurance or overinsurance. Another incorrect approach would be to recommend a policy based on a superficial understanding of the artwork's historical period, such as assuming all works from a particular era have similar market values or conservation needs. This demonstrates a lack of specialized knowledge, a failure to meet regulatory standards for expertise, and an ethical lapse in providing advice that is not tailored to the specific artwork. A third incorrect approach would be to prioritize securing the insurance contract over advising on necessary conservation measures. While the client may be focused on financial protection, the specialist has an ethical responsibility to highlight any conservation concerns that could affect the artwork's long-term value and insurability. Failing to do so, and thus potentially insuring a deteriorating asset without addressing its underlying issues, is a regulatory and ethical failure. Professionals should employ a decision-making process that begins with a thorough understanding of the client's objectives, followed by an in-depth investigation of the asset itself, leveraging expert knowledge and resources. This includes art historical context, condition assessment, and market valuation. The specialist must then translate this comprehensive understanding into an insurance solution that is both financially sound and ethically responsible, always prioritizing the preservation of the insured asset and the client's informed decision-making. Question 19. Risk assessment procedures indicate a dispute has arisen regarding the valuation of a damaged fine art piece under a UK-based insurance policy. The policy contains an agreed value clause, but the insured claims the agreed value significantly undervalues the current market worth of the artwork, providing recent auction results as evidence. Which of the following approaches best aligns with UK contract law and best practices for a fine art insurance specialist? Option A. Insist on the agreed value as stated in the policy, dismissing the insured's evidence of current market worth without further investigation. Option B. Propose voiding the policy due to the insured's challenge to the agreed valuation, citing a breach of good faith. Option C. Immediately offer a settlement based on the insured's presented auction results, overriding the agreed value clause to maintain client satisfaction. Option D. Initiate a formal review of the agreed value clause in conjunction with the insured's evidence and market appraisals, seeking legal counsel if ambiguity or significant discrepancy is identified. The correct answer is C. Immediately offer a settlement based on the insured's presented auction results, overriding the agreed value clause to maintain client satisfaction. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an insurance specialist to navigate the complexities of contract law as it applies to fine art insurance, specifically concerning the enforceability of policy terms when a dispute arises over the valuation of a damaged piece. The specialist must balance the insurer's need to manage risk and adhere to policy conditions with the insured's expectation of fair compensation, all within the established legal framework. Misinterpreting or misapplying contract law principles can lead to significant financial and reputational damage for both the insurer and the insured, and potentially regulatory scrutiny. Correct approach analysis. The correct approach involves a thorough review of the insurance policy's valuation clause and relevant case law concerning the interpretation of such clauses in the context of damage claims. This approach is correct because it directly addresses the core of the contractual dispute by examining the agreed-upon terms for determining value. In the UK, contract law emphasizes the importance of clear and unambiguous contractual terms. If the policy clearly defines the valuation method, e.g., agreed value, market value at the time of loss, the specialist should apply that method. Should the clause be ambiguous, the principle of contra pro frontum, interpreting ambiguous clauses against the party that drafted them, usually the insurer, might apply, necessitating a careful legal assessment. This adherence to contractual terms and legal interpretation principles aligns with the duty of care expected of an insurance specialist and the regulatory expectation that policies are administered fairly and in accordance with their terms. Incorrect approach is analysis, an approach that immediately offers a settlement based on the insured's subjective valuation, without referencing the policy's valuation clause or seeking expert appraisal, is incorrect. This fails to uphold the contractual agreement and could expose the insurer to paying an amount not supported by the policy terms or market reality, potentially violating principles of good faith and fair dealing expected in insurance contracts. An approach that rigidly adheres to the insurer's initial assessment without considering the insured's evidence or the potential for ambiguity in the valuation clause is also incorrect. This can lead to a breach of contract if the clause is indeed ambiguous, or if the insured can demonstrate a more accurate valuation supported by market evidence, potentially leading to legal challenges and regulatory complaints regarding unfair claims handling. An approach that suggests voiding the policy due to a minor discrepancy in the initial appraisal, without a clear contractual basis for such action, or without following due process for policy rescission, is incorrect. Contract law generally requires a material misrepresentation or breach of a condition precedent to justify voiding a policy, and such actions must be taken with careful consideration of legal and regulatory requirements for policy cancellation. Professional reasoning. Professionals should approach such situations by first identifying the specific contractual clauses governing the dispute, in this case, the valuation clause. They should then gather all relevant evidence, including the policy wording, appraisal reports, and market data. Legal counsel or a senior underwriter should be consulted if there is ambiguity in the contract or if the situation presents significant legal risk. The decision-making process should prioritize adherence to the contract, fairness to the insured, and compliance with all applicable regulations, aiming for a resolution that is both legally sound and commercially reasonable. This systematic approach ensures that decisions are well-informed, defensible, and aligned with professional and regulatory standards. Question 20. Research into the best practice for underwriting a high-value contemporary sculpture for a private collector. What approach best ensures accurate valuation and appropriate risk assessment in line with regulatory expectations for fine art insurance specialists? Option A. Accepting the collector's stated purchase price as the insured value and proceeding with policy issuance. Option B. Automatically including a blanket endorsement for all potential damage types, regardless of the sculpture's material or artistic medium. Option C. Relying solely on the artist's auction record to determine the insured value, without considering the specific piece's condition or market trends. Option D. Conducting a thorough review of the sculpture's provenance, condition report, and obtaining an independent appraisal from a specialist in contemporary sculpture, while clearly outlining policy exclusions related to inherent vice. The correct answer is A. Accepting the collector's stated purchase price as the insured value and proceeding with policy issuance. Explanation. This scenario presents a professional challenge because a fine art insurance specialist must balance the client's desire for comprehensive coverage with the insurer's need for accurate risk assessment and adherence to policy terms. The specialist's role is to act as an intermediary, ensuring both parties understand their obligations and that the policy accurately reflects the value and risks associated with the artwork. Careful judgment is required to avoid misrepresentation, underinsurance, or overinsurance, all of which can lead to disputes and financial loss. The correct approach involves a thorough due diligence process that includes verifying the provenance and condition of the artwork, obtaining independent valuations from qualified appraisers, and clearly communicating the policy's limitations and exclusions to the client. This aligns with the regulatory framework for insurance intermediaries, which mandates acting with integrity, skill, care, and diligence. Specifically, it upholds principles of fair dealing and accurate representation of policy terms and conditions, preventing potential misinterpretations that could lead to claims disputes. This proactive approach ensures that the policy accurately reflects the insured value and associated risks, thereby protecting both the client and the insurer. An incorrect approach that involves accepting the client's stated value without independent verification fails to meet the duty of care. This can lead to underinsurance, where the payout in case of loss is less than the actual value of the artwork, causing significant financial hardship for the client. It also exposes the insurer to potential losses if the true value is significantly higher than declared. Ethically, this is a failure to act in the client's best interest and a potential misrepresentation to the insurer. Another incorrect approach, which is to automatically include all possible riders and endorsements without assessing their necessity or cost-effectiveness for the specific artwork, is also professionally unsound. While seemingly comprehensive, this can lead to overinsurance, where the policy value exceeds the artwork's market value, resulting in unnecessarily high premiums for the client. It also adds complexity to the policy that may not be required, potentially obscuring essential terms and conditions. This approach does not demonstrate the required skill and diligence in tailoring coverage to the client's specific needs and the artwork's unique characteristics. A third incorrect approach, which is to rely solely on the artist's reputation for determining value without considering market fluctuations, condition, or provenance, is a significant oversight. Art values are dynamic and influenced by numerous factors beyond an artist's fame. Failing to account for these variables can result in a policy that is either inadequate or excessively expensive, failing to provide appropriate protection or value for money. This demonstrates a lack of due diligence and a failure to provide informed advice. The professional decision-making process for similar situations should involve a systematic evaluation of the artwork's characteristics, market conditions, and the client's specific insurance needs. This includes obtaining and scrutinizing appraisal reports, understanding the nuances of provenance and condition, and clearly articulating the policy's scope, limitations, and exclusions to the client. Professionals must prioritize transparency, accuracy, and the client's best interests while adhering to all relevant regulatory requirements and ethical standards.